In this video, I'm going to talk about the IRS form W-4 for 2019 that's updated. I'm going to talk about the online version and the paper version. So if you're confused about the IRS form W-4, or your employer gave you the paper version to fill out, or you actually did the online version and were totally confused when you got to the last screen, this video is for you. But before we do, if this is your first time at our channel or you haven't subscribed, click on the subscribe button at the bottom. My name is Travis Sickle, Certified Financial Planner with Sickle Hunter Financial Advisors. So the number one question that I get with the IRS form W-4 is that I have the paper version, so how can I do the online version? I need to figure out how to do that. Well, the online version is definitely the way to go, and the IRS tells you right there on the W-4. So you really want to pay attention to this video because I'm going to show you how to use the online version so you can fill out the IRS form W-4. But before we jump into that, I want you to take a minute and put in the comments below what filing status you are. So there are 5 filing statuses, and I'm going to pull them up on the screen. You're filing either single, married filing jointly, married filing separately, head of household, or qualifying widower. So let me know in the comments down below which filing status you are so I can make future videos that are tailored for you. So if the example that I'm going to go through in this video doesn't necessarily apply to you, then in the future I can make other videos that might help you a little bit more. So that first question that I mentioned, the IRS form W-4, the paper version, which is right here, this is the only part. The first page is the only part that you actually need to give to your employer. So you can see it right there. I'll zoom in on the screen here. You see it says separate here and give form W-4 to your employer. Keep the worksheets for your records. So if you're going to use the online version, you can print out the last page. It's going to give you the results for your records, or you can just fill out the rest of the paper version and keep that for your records. So in this video, we're talking about the online version to use for the paper version. This is by far the easiest way to do it and the most accurate. So if you really want to pay the least amount in taxes throughout the course of the year, you want to control your taxes, you want to know what your tax liability is going to be, the online version is the way to go. The paper version really only works if it's January 1st. Because if you're using it through the rest of the course of the year, even if you didn't have a job previously, it's still not going to be quite as accurate as if you used the online version. So you don't have to take my word for it. Using the IRS form W-4 online estimator, it used to be called the calculator, now it's called the estimator. So what you can see here, it says you can use the calculator at irs.gov/W4APP to determine your tax withholdings more accurately. They said it, so it's going to be more accurate. It's the way to go. Consider using the calculator if you have more complicated tax situations. It's going to go into all that. So you really want to use the online calculator. IRS said it, not me. There you have it. So let's do the online calculator and make this a little bit easier. So if you didn't catch it because I just said it, the link to the online calculator I'm going to put in the description at the bottom, or I'll pin it as one of the first comments so you can see exactly where the IRS form W-4 estimator is. At the end of the estimator, it's going to show you, or it's going to give you an option of do you want a refund or not, and it's going to help you adjust it, which is kind of a neat feature if you just want a refund for whatever reason. So here, let's jump into it. Let me set up a scenario so you can understand kind of why we're going through this. So married filing jointly, in this scenario, we're going to go married filing jointly, one job, so there's going to be one income earner, $120,000, and we're going to have 2 kids. So that'll give you an idea of filling out the W-4, what it looks like. And if your situation varies, again, leave in the description at the bottom what your filing status is, and I'll make sure that I update some of the W-4 videos so you can use this online calculator and just pull it up right next to the screen as you're filling it out to make it as easy as possible. So this is the first screen that you're going to see. So we have our filing status. So again, in our example, we're going to make $120,000, married filing jointly, 2 kids. I'm going to point out that they're both under the age of 17. So let's say they're 3 years and 5 years old. So married filing jointly right there. And you can see that's going to walk you through all these questions. And another reason why I like this calculator is because you can jump backwards and forwards without having to redo the calculator. So again, married filing jointly, can someone else claim you as a dependent on his or her tax return? The answer is no. Click no. And the next question is, do you plan to claim dependents on your tax return? So we're going to have 2 kids. So whoops, I'm going to say yes. And then you're going to choose the number. I'm going to choose 2. course, choose whatever applies to you. For your income, do you or your spouse hold a job with regular paychecks that are subject to federal income tax? We're going to say yes. What would be the alternative of that is if you're an independent contractor, but this calculator might not work if you're an independent contractor or you have a lot of income from independent contracting type of work and also W-2 type of work. So you want to make sure that you're filling it out correctly. And if you're a W-2 employee, then this form's for you. So let's go ahead and remember I said W-2, so that's what you get at the end of the year. The W-4 helps you calculate your tax withholdings, which all works for your taxes at the end of the year. You know, this might get a little confusing, but that's what you need to do. So here we say, how many jobs do you expect to hold this year? So I said we're going to hold one job. Now, take a minute and understand that I put married filing jointly with one job. So if you and your spouse work, then enter 2 because you're filling this out together, because at the end it's going to help you split up your allowances. So that's gonna be in the results page at the very end. So you and your spouse should be filling this out together. So go ahead and check off 1 or the number of jobs that you have, or even had. So if you had a job this year and you're starting a new job, that's 2 jobs, and you're going to be able to put them both in here to get an accurate number. How many jobs did your spouse expect to hold this year? So let's go ahead and put 0. Will you or your spouse receive income from pensions this year? I'm going to click off no. And then it's going to populate some other questions. So if you have other sources of income, it's really important that you take a minute to read through this list. So if you're receiving Social Security, your spouse is getting Social Security, you're going to receive unearned income. So the Social Security, it's not if you're withholding for Social Security, it's if you're actually receiving Social Security. Sometimes that confuses people, so you just want to make sure you get that right. Received unearned income such as dividends, interest, annuities, alimony, or a distribution from a trust. Received scholarships or grants. Collect unemployment compensation, earn net income from self-employment. Self-employment, so if you're an independent contractor, self-employment, have earned income from other sources. And you can click on the little question marks. So the self-employment net income, this is the amount of income such as professional fees paid to you and any other compensation you expect to receive for work performed in your own business. This year, less deductible expenses. And the last one, have earned income from other sources. Scroll down, demographics. Will you be 65 or older on January 1st, 2020? Your spouse will be 65 or older on January 1st, 2020. I'm blind. My spouse is blind. Neither one's true. So in this one, I'm going to click on next. Do you expect to hold a job all year? I'm going to click off yes. How frequently do you get paid? So this is where you have to put in how often you get paid. And I'm going to put every 2 weeks. So if it's twice a month, you know that it's always on the same dates. That's twice a month. Otherwise, it is every 2 weeks. There's a difference of about 2 pay periods. So it's 24 pay periods versus 26 pay periods. I'm going to go through that again. Sometimes that gets a little confusing. If you get paid weekly, pretty straightforward. Every 2 weeks. So that means it's always on a different date, but it's every 2 weeks that you're getting paid. So you get paid something like every other Friday, that's every 2 weeks. And if you get paid on something like the 1st and the 15th, that is going to be twice a month. And again, a difference of 2 paychecks throughout the course of the year. So you want to make sure you get that right. Or once a month, again, straightforward. So I'm going to put every 2 weeks on here. So now on this question, you can put on what date did your most recent pay period end? So go ahead and put that in here. So I'll put in 1/15/2019. Enter the amount of bonuses, 0. Using your most recent pay stub. So you have to go get your pay stub to see what's already being withheld. And if you're changing jobs, then you need to know what was already earned and withheld from that previous job. So that's where you're going to go ahead and enter it in here. This is really important so it can make the correct adjustment if you've been withholding too little or too much. So this isn't a total number. If you have multiple jobs, it's going to walk you through each job independently. But you need to have all that information so it can give you the final answer as most accurate as possible. So I'm just going to put in numbers. I'm going to put in 500. Again, whatever is your particular situation, you have to look at the pay stub. It'll say it right there. The pay stub will show you what was withheld from their last paycheck and year to date. Those are the 2 numbers that you're looking for on your pay stub. So I'm just going to make these things up for this example. we'll say that we withheld $3,000 so far this year and $500 from our last paycheck. Obviously, that math doesn't add up, but you're going to see at the end how it's going to make this adjustment. Did you or will you contribute to a tax-deferred retirement plan such as a 401k? So if we click on yes, and then we say how much we're going to contribute, it's going to make the adjustment. So let's say we're going to estimate that we're going to save $10,000 for the year. The reason that's important is because your taxable situation, remember, 401ks, traditional 401ks are pre-tax, lowering your taxable income. So in this example, I said I made $120,000, but by putting that $10,000 in the 401k pre-tax, it's lowering my taxable income to $110,000. Did you or will you contribute to an HSA, FSA, or pre-tax child care credit account or other cafeteria plan? I'm just going to choose no. If you have those expenses, go ahead and put them in there. Click next. Adjustments to income. I'm just going to go to the next step. So the next ones are looking at the deductions. So we're going to take the standard deduction. So if you don't have deductions that are over $24,400, so last year for 2018 it was $24,000 for marriage filing jointly, and it's increased to $24,400. So unless you have a ton of write-offs on the personal side, then you're just going to go with the standard deduction. So we're going to take the standard deduction, click on next, and then it's going to bring you to the next section, which is tax credits. Now, remember, we have 2 kids, so that's going to be the child tax credit. So we can see the tax credits, and you said you have 2 dependents. Is that correct? Yes. We scroll down, child and dependent related expenses. You can see here 2 qualifying children, because I said in the beginning that they were both under the age of 17. I said they were 3 and 5 years old in this example. Then you can check off 2. And then child and dependent care tax credit. So that's the care portion to it. Not just having the kids, the actual expenses for them. So this is like daycare. Select the number of qualifying persons. Let's say 2. Actually, so let's say 0. Let's say we didn't have any expenses there. Earned income credit, what they qualify for. Let's say 0 for that. And nothing for the adoption. So I'm going to put 0 for that as well. And then you can see the other credits. Now, one that always jumps out that I always like to point out, retirement savers credit. So if you're eligible for the retirement savers credit based on your income, then you can enter it there. You can go through them. I'm a little surprised that this calculator even asks you the question for the retirement savings credit, because it should be able to calculate it for it. So I don't really know why it's asking you for how much you qualify for the retirement savers credit, but it is. So if you do qualify for it, go ahead and enter it in. At 110 and 120,000, we're clearly over the limit for the savers credit. So we're just going to click on next. This is the results page, and probably it's a little confusing. Well, it's very detailed. It's not going to give you the answers that you're looking for, and I'm going to show you why. But before we do that, look at this right here. You can see the anticipated tax obligation is $6,555. And expected tax withholdings was $6,500. So the estimated underpayment of $55. So you might be thinking, well, wait a second. How do I fix that? Because I don't want to owe at the end of the year. I'm going to show you that in a second. But before we do that, I want to go back to how much we withheld to show you why this is important. So you can click on the little checks at the very top to go back to that section. So let's go to income and withholdings. Remember before I said I made them up? I said $500 and $3,000. Let's say now that we withheld $1,000 instead of the $3,000. So let's go ahead and click on next, and I'll just jump to the results page by clicking on the last button there, that's 6. And you can see that now our underpayment is $2,055. But look at that. Our anticipated tax obligation is exactly the same. It's not going to change. So it doesn't matter how much you withhold or don't withhold. At the end of the year, your tax obligation is going to be the same. It's just a matter of whether or not you did it throughout the course of the year. Now, the law requires that you fill out the W-4 accurately and you withhold throughout the course of the year. So you can't not withhold throughout the course of the year and then pay it all at the end of the year. But if you are adjusting it, by adjusting these numbers up or down just means whether or not you're going to get a little bit of a refund or get closer to nothing back. So if you get a bigger refund, your paychecks throughout the course of the year are going to be smaller versus somebody who decides that they're going to be as accurate as possible in the W-4 and get back basically nothing at the end of the year, that individual is going to have bigger paychecks throughout the course of the year. So that could be a huge benefit throughout the course of the year, because that could result in a tax-free loan to the IRS. And who wants to do that? Just give them a loan throughout the course of the year only to get it in a refund at the end of the year. Now, if you're a bad saver, start saving and put that money to the side. So if you think you're just going to spend it because you have it in your bank account, set up a system, set up a strategy to get that money out of your bank account into a retirement account or cash reserve, or just do better for yourself financially. Now, let's look at this last screen again. And we're going to adjust it one more time so you can really get the point here. Income and withholdings, scroll down. Let's say that we withheld from our last paycheck $100. That probably won't change it very much at all. And let's say that this number is $8,000, something really high. Scroll down, go to the last page again, results, and you can see it there. Expected tax withholdings, $8,700. Estimated overpayment. What is an overpayment? It means you're going to get a refund, $2,145 in this particular instance. So you can see this little speedometer that they have, and it goes all the way to the one side of the refund because we withheld too much. Now look at these buttons. Now let's jump to the buttons. The buttons at the bottom. And this is the confusing part, because what do you do with an anticipated tax obligation of $6,555 when you fill out all this information? It doesn't do anything for you except give you an insight as to how much your taxes are going to be. You can click on one of these two buttons. So we can click on get my balance close to zero, or I'd like a refund. It's kind of interesting. So let's click on zero. So here's your answer. That's where the real answer is. So let's zoom in for this one. So line 5, enter 24. Wow, that's a huge number. It could scare you if this was what you were doing throughout the course of the year. Well, I'm sure you're not going to withhold that much. But on line 5, enter 24. So this is where people get really confused, because they say, well, wait a second. If I go through the paper version, it says enter 1 for myself, 2 or 4 or 0 for your kids, depending on where you are, all this other information for your particular situation. And then all of a sudden you do the online calculator and it's 24. And that is because the higher the number, the less withholdings that you're going to have to make throughout the course of the year. In our example, we withheld just way too much. So we need to dial back the withholdings quite a bit in order to make sure that we're not just continuing to withhold way too much. Now, let's go back really quickly again and look at if we make that adjustment again. So let's bring this $8,000 down to $500. Let's say this is all we've been doing throughout the course of the year. Go to the results page, scroll down, click on get my balance close to zero, and look at that. On line 5, enter 0. So someone could have the same income, same filing status, same household makeup, 2 kids, and get a different result from somebody who's doing exactly the same things, except they entered a different number throughout the course of the year. So their tax liability, whether or not they're going to have to pay or get a refund, is going to be different than somebody else's. So you can't say, hey, I'm married filing jointly, I have 2 kids, what should I put? It doesn't work like that. So you have to make these adjustments. Now we can look at that other button and says I'd like to get a refund. It still says 0, but on line 6 it says enter $563. And I think even on the getting to 0 is telling you to enter $480. Yeah, on line 6, enter $480. At line 6, it's just adding additional withholdings. So you can see on line 6 on the paper version. So this is where you're going to fill it out. And we'll go through it in just a moment. But line 6 says additional amounts, if any, you want to withheld from each paycheck. And because we put such a low number, it has to play catch up. So 0 seems like a low number, but that means it's going to withhold the maximum amount based on your income for the calculator on the allowances. And in addition to that, you have to withhold additional dollars of $480. Now, again, if we go back up to the top, income and withholdings, we go back down, and let's say that we've already withheld more money throughout the course of the year. We enter in $3,000. We go back to the results. And once again, these numbers are a little different. So you could say on line 6, enter 63, or I want a refund, enter $147. And there are a lot of other factors that could come into play for your tax refund or payment at the end of the year. Review it as your life changes, as your situation changes. If you get married, if you get divorced, if you become a widow, a widower, you have a child, all these instances are going to change. Or your child is over the age of 17. Now they're just a dependent, or they're 17 or older, and they're just a dependent at that point. So it's not going to be the $2,000. It's going to drop to $500. So all these factors will change the amount of tax withholdings on the W-4. So this is the only part that you're going to fill out for your employer. All the rest are just worksheets. So you can take the answers from the paper version or the online version and put them right on this page. Now, all the basic information, your name goes here, your last name, social security number, your home address, city, state, and zip, and put your filing status right here. So we are married filing jointly, so we're going to check off this checkbox right here. Go ahead and just check it off. And then you can see lines 5 and 6. Those are the ones that are really important. Now, if your answers, for whatever reason, show exempt, that's line 7. But if they give you an answer to enter on line 5 is right there. So that's where you're going to enter in that information that we had previously on line 5. Line 6 is the additional withholdings. Go ahead and sign it, date it, give it to your employer. And the 8, 9, and 10 at the very bottom, that's all for your employer. So you don't know that information if it's a home office, or you don't know what the date of your first employment date was, or you don't know your company's EIN, which is the business's social security number. Then go ahead and give it to your employer. They can help you fill that out. That shouldn't be that big of a deal. But this is all that you need to fill out and hand to your employer. The rest of the pages are just for your records. You can't even give them to your employer. They're going to give them right back to you. So all you need is this part of the W-4. So that is the online version and the paper version. So you don't need to overcomplicate things by using the other worksheets on the paper version. Go with what the IRS tells you to do. Use the online version. It's so much simpler, and you're going to get a more accurate answer, pay the least in taxes possible throughout the course of the year, so you can put more money back in your pocket and not have to wait until you get that refund. Because remember, at the end of the day, it's still your money. It's whether or not you want the IRS to hang on to it for you for the course of the year just to get it back in a refund. Doesn't make a whole lot of sense. So go ahead and fill out the IRS form W-4 online, fill out the bottom of the W-4 paper version to hand to your employer. So it's really just about lines 5, 6, and 7 if you're exempt from withholding any taxes. Lines 5 and 6. Those are the ones that you're going to deal with the most. Now, if you don't have additional withholdings, like line 6 says 0, just leave it blank or put a 0, a dash. It doesn't matter, because your employer is going to take this information and apply it to the payroll so they know how much to withhold. That's it. That's all you need to do. That's the W-4. And if you didn't see it in the beginning, make sure you put your filing status in the description at the bottom. If you have any questions, put them in the description at the bottom so we can put them on future videos. If you've enjoyed this video, be sure to subscribe and leave your comments down at the bottom.